those details, but let's put the spotlight on Godrej Consumers. The company did come out with its earnings. Let's try and find what's the outlook going ahead. And for this, we are being joined by the management, Mr. Asif Malbari, who's the CFO of the company, joining us on the show right now. A very good morning, and thank you so much for your time. And firstly, if I can just talk about your numbers, what I see is that despite an inline revenue and the volume growth, the profit has missed the street estimates and the margins fell nearly about 280 basis points. What were the key cost pressures, and when do you expect the margins to normalize going ahead?
So I think, as you mentioned, we had a strong top line growth in the quarter, delivering at a consolidated level 10% revenue growth with a very strong 8% underlying volume growth. So hence, from a top line perspective, a very strong delivery. There were a few places where we could have done better than this, but there were a few places where the performance was much stronger than our trend lines. But give or take, top line came in very strong this quarter. When it comes to profits, the overall profit delivery was muted. We did 100 IYA on PAT. A few reasons for this. Commodity prices had peaked in Q1. Palm oil was at its highest level and it started seeing a correction from May, June downwards. Given the change scenario of commodity, we had to kind of be a bit more constrained on pricing in, and hence margins were lower than their normative levels in Q1. And we had already shared in our investor meet in May that the margin improvement will be a second half phenomena. It will be a sequential improvement and margins will be much better in second half compared to first half.
All right, but along with that, the volume growth has been healthy at 8% in Q1. Tell us if this is sustainable. What's the outlook going ahead?
Yeah, I think the volume growth should be sustainable going forward. We have spoken about um, these levels of volume growth, and our aspiration would be to remain here. Going forward, we should see the India volume growth actually inch up from the Q1 levels. Having said that, we had a very strong Q1 in the GOM region, in Africa and US region. That was, we delivered a revenue growth of 30% there. That should kind of go down a bit. We still do double-digit revenue growth there, but it'll calibrate downwards given that we had a extremely high Q1. But give or take, we definitely should see our top line sustain at these levels.
Okay, and Asif, let's talk about some segments now. For your personal care segment, you've guided for some margin pressure in the second quarter as well. Now, with palm oil prices cooling down, help us understand by when we can see this translate into better margins for this segment, especially for the soaps sub-segment.
We guided that we should see a margin improvement coming in from second half, which is Q3 onwards. Typically, these commodity cycles and margin pressures do take a few months for falling in place because you hold inventory, there is some stocks, pricing takes a bit of time. So to the time we get on to the right pricing for the right replacement cost, we do kind of feel that it will be another quarter away.
And along with that, the home care segment that has seen a growth of 16% on a YY basis with strong double-digit growth in the air freshness and fabric care. Is this broad-based demand or driven by specific geographies?
No, the demand's quite broad-based. We've been doing extremely well for now many quarters in the entire air care segment. Yeah, Pocket has been doing very well. Air has been doing well. During the course of this quarter, we also launched a new product, which is Plug on e-commerce. That's seen good initial traction. So it's been broad-based growth on the air care portfolio. When it comes to fabric wash, again, it's been a very splendid performance by the new brand which we launched, which is Godrej Fab. It has been doing extremely well across the nation. So yeah, very broad-based growth.
Okay, and Asif, help us understand the strategy on pricing. Are there any more price hikes on the cards? How much of the commodity inflation seen earlier have you been able to pass on to the end consumer so far?
So I would say no significant price calibration apart from that of personal wash. We'll need to kind of see how commodity costs in terms of specifically in terms of palm kind of stabilizes that and what would be the appropriate pricing levels. But apart from personal wash, there is no significant actions on pricing.
Sure. And let's now talk about your international business. Like you were mentioning earlier, Indonesia has seen negative constant currency growth while GOM has done quite well. What are some headwinds that you're seeing in Indonesia? Any reversal there? Any impact of tariffs on your international business? Is that something you're factoring in at the moment?
I think just to kind of go back a little bit in time and look at the performance of the international business, over the last 1.5, 2 years, we've significantly improved the profitability of the international business. The profitability was somewhere around 10%. Now it's kind of moved to around 18 to 20% range. So we've significantly taken up the profitability of the entire international business. So we are very happy how the profit growth in the international business has been over the last, I would say, 1.5, 2 years. Now, looking specifically in Q1 on the performance of the international business, we've had actually a very strong top line delivery in GOM. It's on the back of introducing some of our I would say hero products from India in the Africa region. They've been received very well. We've launched Air Pocket across many countries in Africa. We've also kind of seen the base business of hair fashion kind of growing well. So a good performance in large parts of the business. Indonesia had a muted performance in this quarter, partly due to some competitive pressure and the macros. But we see this temporary. We're hopeful that this should kind of settle down in some time. So yeah.
All right, to understand that, but given the mixed performance across geographies and categories, do you expect to revise your FY26 growth or the margin guidance anytime soon?
No, so we had given our outlook in May for the full year. We are reasonably confident that we should be able to kind of meet that outlook of high single-digit consolidated revenue growth and double-digit profit growth. So yeah, at that stage, we had spoken about sequential improvement and second half being better than first half. So we are broadly actually on track in terms of the guidance which we had given when we began the year.
All right, with this, we'll let you go and really appreciate you taking the time out and speaking with us this morning. Thank you so much.